Welcome and thanks for joining us at EMII.com. I'm Ainsley Feuer with your hedge fund headlines. Today is Friday, March 6, 2009. Billionaire financier Carl Icahn injected another $250 million into his hedge fund on January 1st. According to the New York Times, the move, meant to regain investor confidence, comes as his investments in Motorola and Yahoo suffered further losses in the fourth quarter. After receiving over $1 billion in redemption requests from investors, in November, Icahn invested another $250 million of his own money into the fund in order to avoid selling the stocks. Staying with hedge fund news, China Daily reports that China Investment Corporation, the nation's $200 billion sovereign wealth fund, plans to increase its holdings in the nation's three largest state-owned banks. Vice General Manager Wang Xingzhai said the sovereign wealth fund will continue to purchase shares of Industrial and Commercial Bank of China, and China Construction Bank, including their H shares. Wang added that the fund is looking for investment opportunities in consumer goods, manufacturing, and resource companies this year. And in more hedge fund news, the French regulator has rejected GLG Partners' appeal of a 1.5 million euro fine it charged the hedge fund firm for insider trading in Vivendi shares. The ruling follows Autorité des Marchés Financiers' probe of GLG's trading in shares of the software company Infogrames Entertainment. London's GLG was the first hedge fund to be fined by the AMF for 1.2 million euros for trading abuses, along with the manager of the issue, Deutsche Bank, also fined 300,000 euros. And in other hedge fund news, Reuters reports that the Australian Securities and Investments Commission has extended its ban on short selling of financial stocks until May 31st. The ban, aimed at stabilizing the financial markets, has instead created large distortions. Macquarie, one of Australia's most prominent banks, has lost over half its value since the ban was introduced. Four of Australia's largest banks, National Australia Bank, Commonwealth Bank, Westpac, and ANZ, have also seen a loss in share value despite the ban. And that rounds out today's hedge fund headlines. Thank you for joining us on EMII.com. For more details on these stories and much more, click onto our hedge fund channel online and read the full stories and latest developments.